Beef Market Update with Ann Wasco on RealAgriculture.com is brought to you by Haney Farms. It's now time to talk a little bit about the beef market, and as always, joined by Ann Wasco of the Gateway Livestock Exchange. Annie, how's it going?
I'm good, Sean.
Oh, it's Friday. Thank goodness, eh?
It's Friday. Yes.
Okay, before we get in depth here, I want to mention this segment is brought to you by Proven Seed, Proven Performance, Proven Innovation, available only at Crop Production Services. Learn more at provenseed.ca. Okay, Ann, this live cattle future, it's been working its way higher. Now, it's really interesting because in the last month, we're actually up 6% on the December live cattle future. That's $6.50 US. What's been inching us higher?
Well, certainly a lot of the drivers this week are the same drivers that we've had all fall long we've been talking about. So since this market, kind of made it slow on the cash back around Labor Day, we've seen the better fundamentals continue to support the market. Some of it's been the margins, all the players making money, especially on the packing side of the business. So they're wanting to keep chugging through cattle. Same with the cattle feeder. Until recently, that's been the driver. Sell the cattle, refill that pen. Cost of gains down have been a profitable 2017. So all of those things, we've got our carcass weight still lower than a year ago. Demand's been better all year as far as domestically and export. So those same drivers have kind of the market's been able to say, okay, it feels like we've seen the low from back in September. We're going to shake it off. We're heading into some holiday demand for U.S. Thanksgiving and Christmas, New Year's holidays ahead of us. That's always a good time for beef demand, or historically it is. And so the market's just feeling much more comfortable, even when it gets thrown some bearish news like big placements from a cattle on feed report last Friday. So it seems to be able to shake these things off and keep chugging along.
From a feed yard perspective, feed costs very reasonable. Comparatively speaking, like if you look at December corn future, it's been locked at $3.50 for a while, which hasn't created a lot of opportunity for any sort of trading, but it definitely sort of gives some stability to what feed costs are going to be going forward.
Right. I didn't think you'd bring that up today, Sean, but if we're, the December live cattle corn forecast, as far as I think a number you might have thrown out a while ago, but certainly $3.50 corn as we head into the winter feeding period is certainly a profitable or certainly a lower cost of gain, and that's been supportive to this feeder market. Both sides of the board are certainly going forward. So that's a key part of this whole equation, cost of gain.
Yeah, so I was like $1 wrong. Okay, so let's just...
Only $1. Only $1.
It's like 25%. Okay. So when we have some strength to the fat cattle market, it's going to have a definite impact on the feeder cattle market, and that has definitely been what we would call a seller's market.
Yeah, I'd call it. And, we talked a couple of weeks ago, started into some producer meetings, speaking at producer meetings across the West here. And certainly everybody's pretty tickled with the calf prices that we've got going on in Western Canada. They're well above, if you just look at last week versus the same week a year ago, which was kind of when we made our fall low in 2016, we're looking at $3 to $3.50 a head. $100 a head higher than a year ago, so $235 Canadian on a 5.5 weight calf, kind of the average last week. So big money. I'd call it a seller's market. I'd rather be selling calves than buying them. But don't forget, we've had a change in the Canadian dollar. If you go back to early September, our dollar's down at 77.5 today. That's pretty close to a nickel lower than we were when we started September. And that basis between local prices and the U.S., what our cattle feeders in Canada are selling cattle for vis-a-vis the U.S., continues to be a very strong basis. So some local things going on that have certainly allowed the local calf price to be very solid.
Well, as boring as the corn market has been, and as encouraging as the live cattle future market has been, the Canadian dollar is the one that I think has got a lot of people super stressed out about what position to take on this thing.
Well, again, because it's certainly made a reversal from the trend that we were looking at as we came into the fall. So it does have everybody scratching their head, and we've got lots of things going on politically and fiscally in both countries that are playing parts on both sides of the border.
Okay, so we've talked a little bit about what's been going on at JBS, and one of the questions I get asked a lot is, as they've had some plant closures, they've reopened. There's a lot of really, it's a volatile situation in Brazil. Is that an advantage for Canada? Like, does that give Canada an upper hand in the export market?
Well, I think North America-wise, I think I'd include the U.S. and Canada in that comment, and that's certainly been the driver to date as far as good movement both in U.S. and Canada as far as export demand goes. And anytime you kind of shift the players around on that global list, or who's in, who's not, certainly that allows Canada and the U.S. to kind of pop up to the top of those mixes. So maybe it's hard to argue it directly, but certainly in a bigger picture indirectly, you can't not say it's positive.
Yeah, if I think back to the summer, we talked about a wall of cattle. There was a real bearish tone to this market, and we did talk about this quite a bit, but it really hasn't worked out that way so far. I guess as we look ahead, how do you feel about this market for the rest of the year? Are you encouraged?
Well,
do you think this continues, or is there cautionary tales?
Well, two things. First of all, Sean, I think rightfully talking about bigger cattle supplies when you've got the U.S. cow herd expanding like it has been. So that's certainly been true. There's been more calves on the ground. There's been more calves fed, and we've seen more calves placed. All the cattle on feed reports this year in both countries have been showing us that, and more cattle making it to slaughter. So the numbers are there. It's certainly the supply story was correct. Where I think we still need to be cautionary, I think is the word you used, is on the demand side. We've had great demand so far this year. We've taken some weight off the market because of these smaller carcass weights compared to 2016. So those are the things I'm going to be watching into 2018. Do the margins change? Are we going to be looking at any kind of pullback if we start to see negative margins at the packer or the feedlot level? So there's something to watch. Certainly on the export side, let's watch that. Watch carcass weights. If we start to see weights move up, there's another flag. So I guess my nature is also always watching conservatively as far as what looks. At some point in time, history says we'll get ourselves into trouble again. But for now, the market's operating well, and I think until we turn the calendar into 2018, we can rest easy.
Yeah, one thing's for sure, this market will change. Just when you think you've got it figured out, boom, here it comes. Okay.
Yeah, time and time again.
And you have yourself a great weekend, okay?
Thanks, Sean. You too.